Thank you, Trevor, and thanks everybody for sticking around with us throughout the day. It's greatly appreciated. We got an all-star panel for this session, and personally, I'm super excited to be moderating it, coming from the blockchain ecosystem space and being a techie nerd. But with that said, we're not going to be focusing on the tech here, more so digging into some of the unique finance and accounting challenges blockchain companies and foundations face in this digital asset space. So I think a common theme we've heard from previous panels, and Trevor, you just touched on it, is these finance leaders have a lot of things to take into consideration when making decisions, probably one of the most tough jobs in this space. And I think it gets overlooked quite a bit, some of which we're going to get into this session here. So without further ado, I'd like to introduce our panel. We're fortunate to be joined by some of the biggest names in the blockchain space. We got Harpal Singh, the CFO from the Algorand Foundation. We got Kimberly Rowland, the VP of Finance Operations for Hedera Hashgraph. We got James Ting, the Regional Controller from the US from Ripple LLC. And then we got Philipp Styger, the Payments and Operations Lead from the Nair Foundation. And before I let them give introductions for themselves, I want to give two medals out here. So Harpal, you get the medal for staying up second latest for all of our moderators. I think in the UK, what is it, like 10 o'clock now your time?
Just
and Philipp,
10, yeah.
You win, you get the gold medal for Switzerland. If my time zones are right, I think it's 11 o'clock. So yeah, if we want to go around the room real quick, Kimberly, James, Philipp, and then Harpal, like give brief introductions and we'll get into the Q&A.
Sure. I guess I'll start that off. I'm Kimberly Rowland, the VP of Finance for Hedera Hashgraph. I spent 20 years in public accounting and the last 4 in the Web3 space for a variety of digital asset clients. And I fell in love with layer ones and Bitwave, of course.
Great. James, you want to give a brief intro real quick?
Sure. Thank you for having me. I'm the US Controller at Ripple Labs, Inc. I have a decade of public accounting experience. I audited numerous US publicly listed SOX-compliant technology companies, tangible tech companies like semiconductor, medical device, and drone companies. One of the panelists earlier mentioned if inventory and FX had a baby, it will be crypto. And certainly you could find pretty strong accountants on unexpected places because digital assets is a pretty new space. I certainly find the transition from public accounting to industry a very beneficial one, given that we're very balance sheet focused, capital intensive business. I mean, that's at least from my clients coming into crypto, that's been very helpful from a different perspective.
Cool. Philipp, you want to go next?
Sure. Thanks for having me as well, even though it's very late. It's an honor to be here. Yeah, I also have Philipp Styger. I work for Nair Foundation as a payments operation lead, and it's my first endeavor in the blockchain industry. Before, I was also 6 years in public accounting, and was also switched aside then and was already working as a group controller in the gas and oil industry before I made the step to go into Web3.
Great. Thanks for that, Philipp. Harpal, you want to go ahead?
Sure. Thanks, Chris. Thanks for the warm welcome and thank you for having me. I'm Harpal Singh, the CFO of the Algorand Foundation. Algorand is a layer 1 blockchain founded by the Turing Award winner Silvio Macali. And at the foundation, our job is to grow the ecosystem by encouraging development and use of the blockchain. Prior to being at the foundation, I've spent the past 15 plus years working in asset management space and professional services companies like PwC.
Cool. All right, so the first question we're going to give everybody, it's going to relate to like accounting challenges that you guys face in this space. And for everybody watching, we got kind of like two sets of people here. We got like things looking at, accounting from a foundation point of view, grants, treasury management. And then we've got like the technology side too, who's building the tech, which are super cool. But we've got two people up here from each side. So Harpal, we're going to start with you. So
Sure.
Why is accounting and digital asset space particularly challenging, especially from the foundation side for Algorand?
Sure. Thanks, Chris. I think in terms of challenges, I have to start with how we account for transactions that are crypto denominated. Now, what's clear is that we have this pre-existing set of accounting standards. And so reasonable amount of time needs to be spent evaluating the nature and features of transactions to then determine are what I would say is the most appropriate accounting standards to apply. Now, this is a relatively new industry, right? And so therefore, this does bring an element of subjectivity and judgment. And so, in my opinion, what's really important is that we surround ourselves with industry experts to ensure that we reach the right conclusions. And it's also appropriate to ensure that we have the right level of documentation, e.g. in the form of accounting memos. Now, to give an example from a foundation, an Algorand foundation, the Algo token is a utility token. And so the accounting treatment for this can be considered quite unique because it brings in concepts like off-balance sheet transactions. Now, if I was to move on to another challenge and leaning on more recent experience, at the foundation, we undertake a statutory audit on an annual basis. Now, in this industry, I would say, especially considering, I started my career with PwC as an auditor, these audits are especially difficult. Now, from the client's perspective, it's taking time to determine the most suitable audit evidence to provide. And from the perspective of the auditor, it's not necessarily that they're lacking from a technical perspective, but they're still trying to determine the most efficient way to audit balances to obtain comfort over those, what we all know, those traditional audit assertions, and in particular around completeness and existence.
Yeah, Philipp, I'm curious from your side, from the Near Foundation, like following up on like Harpal, what do you see some accounting challenges going on over there?
Yeah, I mean, what is the same basically as in traditional accounting is in the Web3 space is that we're ensuring completeness, accuracy, and valuation of transactions, of course, along with the other assertions, but those in particular. So to meet the completeness and accuracy requirements, we need to ensure that we comply with the regulatory requirements and local accounting standards, which apply for Switzerland, and that we correctly capture and process the data which is on the blockchain, and that we reliably link this data to supporting documents, just as contracts and invoices, which is the link to the Web2 world, let's say. In addition to that, accounting guidance in the Web3 world is not completely transparent and changes very dynamically. So it requires a close collaboration with both internal specialists, external service providers such as Bitwave, as well as with our auditors to always stay on top of things. I mean, when it's coming to valuation, Near generally follows a prudent approach. Especially in the valuation of assets like SAFT or SAFE. We align valuation rules closely with auditors based on the local and current regulatories on a regular basis. And we also try to foster an understanding of the industry and chances which this new technology brings, basically, to gather an understanding. So essentially, by fulfilling all these requirements, it's our goal to build trust around both the foundation and also around the ecosystem, and also to increase the acceptance basically for the industry as a whole.
Yeah, that's great. Kimberly, I'm curious, like from Hedera, I know Hedera's got a foundation as well, but like coming from like the Hashgraph side, like what's some of the challenges you're seeing? You've been in this space quite a while as well.
Sure. Well, Hedera Hashgraph being a layer 1. Besides the volume, I think we're currently at categorizing 21 billion transactions. I missed the D's of just 4 billion last year. I'd say it has to come down to our quick close. We deliver our treasury management report, which accounts for all the token spend to the public every month. And we have to explain any variances to our forecast to like a variety of audiences. And I think different audiences explaining that to whether it be your auditor or your tax accountant or a user versus an exchange, detailing those is really different. And I've really surprised at how in-depth the exchanges hold you to the variances that you may or may not have. I mean, you pay that bill on the 30th of the month instead of the first the next month. They're there to let you know. And I tell you, don't get me wrong, due diligence is great, and I appreciate them for that. But holy hot dogs, Chris, being under that microscope can be a challenge.
Yeah, I think we want to clarify some stuff in the chat. You said like 21 billion, right? With a B.
Yes, with a B.
Yeah. That's insane. James, I'm curious from Ripple's point of view, like being a blockchain technology company, you guys have been around for quite a while. What's some of the complexities you're seeing in the accounting fronts?
I would say the most challenging part is to make sure that the accounting practitioner, both internal and external, can understand the economic substance of the transaction being considered and not just get fixated or lost on the legal format or the current tax treatment, which is constantly changing, both the rulemaking as well as the interpretation of that. And this can be done by having a good understanding of the business of the reporting entity you're looking at, who the customers are, as well as how is it adding value to the customer. So that is one challenge that we always have because we have a lot of very interesting transactions and there's a lot of analogy to other industry or other circumstances, although there is sometimes deviating from how legally or tax-wise is characterizing those transactions. And while substance over form is a very important accounting concept, US GAAP does require careful analysis of the scope of the transaction to be able to apply the appropriate recognition, subsequent measurement, and the recognition guidance. So step one really is the most important, most critical step, making sure you're looking at that right scope. Otherwise, everything else will be wrong. And given that there are many accounting and regulatory gray areas and that there's a lot of diversity in terms of the Web3 businesses out there, as well as different use cases of digital assets, it's challenging to apply the existing accounting model. And it also results in a lot of rule-based exceptions and really unusual outcomes that contradicts this substance over form principle that we have to constantly explain. So that creates challenges for financial statement preparer and also for users of those financial statements like management, auditor, regulator, investors, to really be able to understand how the business is doing of those Web3 companies. That is one of the biggest challenges I see.
Yeah, and I'm kind of curious, that leads into the next question. I'm going to ask some questions around financial statements, and we'll start this time from the technology companies on the panel here. So James, like being a technology company, like what are some of the key differences you see between like Ripple's financial statements and those of quote unquote traditional tech companies?
So at Ripple, we're pretty unique, to say the least, global business. We have 15 different offices, and we're present in more than 50 different countries. Focus on enabling our vision, the Internet of Value, through the use of blockchain technology and enterprise solutions. We believe that if there's no such thing as cross-border emails in Web 2, then there shouldn't be cross-border payments in Web 3. That really is what's motivating us to enable this biggest upgrade through blockchain technology adoption. Compared to traditional tech companies, I think we have a really strong cash positions as well as a very healthy balance sheet. Also, we hold digital assets. For example, XRP, that people probably know out there. We also have those transparency report about how we use those XRP. We use it in a number of different ways in our business in combination with our tech stack, each of which is arises different accounting complexities given the ambiguity in the space and how to kind of analogize it with how like bartering transaction, et cetera. There's a lot of very interesting accounting topics that comes up depending on who you're using the XRP with and what context. And accounting also, as part of being a global business, accounting matters such as consolidation, currency translation, intercompany elimination. Actually, these topics create additional operational and accounting challenges that you normally wouldn't expect, given that the way that a blockchain company scales currently is very global, much earlier than those really large tech companies, that traditional tech companies you will see out there. And at Ripple, finally, we believe that the future is multi-chain and interoperability will be the focus. And this is why we continue to make strategic investments ourselves in various Web3 companies that form that critical Web3 infrastructure. And we believe that working together among digital asset participants is key to everyone's success.
Yeah, great comments. I couldn't agree more on the interoperability part. I think all four people up on stage are going to have jobs for quite some time. Kimberly, like, can you share some thoughts from your side on Hedera, like how financial statements are structured differently to what you've seen in the traditional world?
Well, for starters, I would say getting the financial statements into their proper form is very different. We're a Web3 company using a variety of Web2 to tools. And I think just last week, we were in a room full of accountants in our industry, and we asked, what tool is everyone using for FP&A and to really dive into the analytics? And there were crickets. And we thought, okay, so we're all still using Excel and Google Sheets. So we'll continue. And it's just, we're running ahead of, I think, the capabilities to the software in general. I know we're coming along, but we still have a ways to go. As far as the statements themselves, I have found the variance from like a SaaS entity to how we're reporting are the variety of sources and deferred revenue, and the uniqueness to the deferred gains on prepaids. There's the complexity in the specific layer 1, layer 2s, because we have no basis. We mint it at a 0 basis, and we use those tokens to fulfill obligations. And we have to recognize the moment that we, pay a bill or any kind of contract that we recognize the full gain. And if that happens to be a prepaid expense, well, we have to defer the capital gain on our balance sheet and allocate that gain as we allocate the expense. And I feel like that's a real unique item to our industry that people don't consider.
Very interesting. Very interesting. Thanks, Kimberly. Now I'm curious, like from a foundation point of view, Philipp, we'll let you kind of start off here. What do you see with the Near Foundation?
Yeah, I mean, the basic difference is that basically Near Foundation operates as a non-profit foundation in Switzerland. Our main goal is basically to support and grow the ecosystem. Our job is therefore basically to distribute capital effectively and to reduce the risk of loss. When it comes to financial reporting, it's basically not much different. So we have statutory external reporting, where we make sure that we stay compliant and in line with the rules. And of course, we have the internal management reporting to the council to make sure that they're able to make good long-term decisions. Yeah. So our position on the Swiss law means basically it's different from most international for-profit companies. So major difference comes that Swiss Code of Obligations follows the prudent principle, whereas in international reporting like IFRS or US GAAP usually have a fair value approach. So which means that for our balance sheet, basically our treasury is not valued at fair value, but the token treasury of the Near token is basically with a book value of 0. So only once the tokens are spent, the fair value is applied, and therefore then it has an impact on the P&L. So which means the figures that you will see in the P&L largely come from the underlying market conditions and the token price. So comparing the numbers between different periods can be a bit challenging. That you can reckon. So therefore, it's a further challenge for the team to produce and present decision makers a transparent and meaningful set of management reports for them to fulfill the foundation's purpose effectively. So we provide the management with a real-time view of where we are, what commitments we have, what our burn rate is, and what our runway looks like in order for them to make right decisions going forward. So that's probably the difference.
Yeah, Harpal, I'm curious from your point of view on the Algorand Foundation. I bet there's a lot of things that overlap from what Philipp had said there, building out the ecosystems and such.
Yeah, no, absolutely, Chris. Very similar to Philipp. I think given we are a foundation, the objectives are different to begin with, right? From a traditional tech company. So if you were to like just put two sets in front of you and try to carry out a comparison, you're not going to have balances like IP, trademark, and licenses sitting in your financial statements. Don't get me wrong, there may be some, but not a significant weighting. The weighting will more come from how a foundation executes its strategies. And I won't go over the same objective that Philipp said because we're very aligned from that perspective. So you'll end up seeing balances more like investments, grants, community champion payments, deployment of treasury into DeFi. Yeah. And I think Philipp's also made a really valid point around, in TradFi, you would very much be used to placing some reliance on your prior year comparatives to make sense of your current year balances, to bridge a gap between the two and understand what's gone on. And with the underlying movement in the token price, that can be very difficult to do. And I wouldn't say yet that there is suitable disclosure notes that ring fence the token price movements with the attempt to normalize those numbers so you can make better sense of them. But maybe in addition to that, and sticking with reporting, but perhaps moving away from financial statements, and maybe equally, if not more important, depending on your audience, we produce a quarterly transparency report. It's published on our website if anybody's interested in reading. And the idea is to really explain and reconcile the movement in the foundation's token treasury between periods. And I would say that the key difference here is that this reporting is on a cash basis. And that obviously significantly differs from accounting standards that are applied for financial statements. And therefore, it's like maintaining two sets of books.
Awesome. We got a lightning round. I just got warning. We got 5 minutes here. So we're going to go around, and if everybody could give one of their quick tips for foundations that might be tuning into this or other blockchain companies that are developing in this space. So we'll let the foundation side go first. Harpal, I'm going to put you back on the spot. What's your tip?
Sure. Just very quickly, a couple of themes. One is let's do the basics right. So let's have strong financial controls and oversight. 2, maintain tight treasury management, annual budgetary process, get the CFO involved and understand the business. And then 3 is what I call continuously review your financial operating model, making sure your counterparties that you're using are still fit for purpose and building partnership type relationships.
Awesome. Philipp, what's your wise words of advice to leave us with?
Yeah, I think as a foundation, as a layer one in general, if you have the possibility to work with companies like Bitwave, right? I think it's important to make really good relationships that ensures flexibility with changes in regulations and accounting guidance, as well as, for example, if a new token is listed on your blockchain, like for example USDC, which became natively available today on Near. To help to have a good relationship with service providers can influence the product roadmap, and that can improve your team's efficiency and insight, but it could in the end also help the ecosystem. So maybe that some projects in the ecosystem can also use the product like Bitwave, and then it would close basically the value cycle to help everyone to move forward. Yeah. So that's my advice.
Thanks for the plug. That's one of the best things I like about my job, is I think I work with like all of you guys, but just the relationships that are built in solving hard problems, like the customization that goes into it. There's regulatory frameworks constantly changing. You got to change the tech. Like the next thing you know, we've got new rules and guidelines to come out with. So now your reporting doesn't make sense. So, all right, James, let's hop over. What's your tip you want to leave us with?
Sure. I would say that there's quite a bit of a barrier to entry, really, from the sense that this industry is full of a lot of jargons, vocabularies. So I think the easiest way or the best way to overcome it is through education. And blockchain is a fairly complex field combining aspects of finance, technology, and law. So it's not surprising that it requires continuous learning so that you can successfully navigate this space. So in order to do that, there's a lot of online resources available, or offline resources as well, like online tutorials, webinars, podcasts, seminars, and like those events, the great events that everybody's so excited about, including this one, EDAS, organized by Bitwave, to really familiarize yourself with the nuances of blockchain and the industry is concerned. And then finally, I think it's very important, nothing will really substitute hands-on experience. Once you get comfortable with all the vocabularies, and it's time for you to go to one of those reputable providers yourself and create a digital wallet, purchase, sell, or send a small amount to your family and friends. That way you will really see what the promise of blockchain technology in its current state, as well as its pain points. You will see what the buzz is all about. You really cannot do that. You cannot outsource that other than trying to do it yourself.
Yep. I heard that on an earlier panel. Like, just get your hands in there, dip your toe in the water, go buy some Bitcoin with $10 and see what happens. Kimberly, save the best for last. Like, what's your tip you want to leave us with?
Well, for everyone out there, please reconcile your wallets. You don't leave your bank account unreconciled. Reconcile your wallets to the blockchains. I'd like to say, let's do better. Let's try to unite in our standards, share our standards with our users. Everyone out there needs a CSV extract, and we need to make it more accessible to the public. Let's make sure that our users in the community has the tools they need from our chains and to service their accounting needs for not only their business success, but ultimately ours. And then I'd say a general tip is just to give yourself grace. Whether it's your team, your CPAs, your vendors, give yourself some grace. We don't all know everything. We are all pioneers here. And whether you're on the panel or out there coding arbitrage transactions or trying to do our taxes, you're really playing an important role. And I just want to thank everyone for what they do.
Thank you for that, Kimberly. And thank you, everyone. Thanks for staying up late, Philipp and Harpal. Greatly appreciate it again. Trevor, I think we'll hand it over to you for our last session.